Hi friends, let's take a look at Ethereum together. As you can see, I've left off yesterday with a whole bunch of squiggles on the chart, and isn't that a good laugh? Now, what was yesterday's video title called? I think it was, is 245, could that be the top? If we just look at the price action here, the highs of today, just here beside my head right now, I don't know if my hair is covering it up. The high was $245. I have to say to people, like and subscribe. Got a lot of views yesterday in the Ethereum video. Like and subscribe for this sort of content daily. The fact that we got a turnaround here when the measured move from a potential ascending triangle here coming in would take you, with the minimum measured move would have taken you up to 255. Throwing that idea out there that 245 could be the tops, and as we've seen today's price action, 245, and then we're down at 237. I think that technical analysis yesterday, as brief as it was gold dust. And I'm not a financial advisor, definitely not. None of my videos are financial advice. No, no, no. However, since starting this channel, we have hit home run after home run with the Ethereum. Anyway, where are we right now? We're in this sort of channel up the way, and we've been looking at we kind of put this on the charts, and we're considering, will we be able to break above this? Breaking above this, I actually think, is quite a good thing, and we could, in fact, even look towards the subsequent further higher up targets like that 290 area. Looking to the left, you can see that that's obviously very significant because that is, the shoulders of the sort of head and shoulder, is that what that was there? I think maybe, yeah, pattern there. Anyway, just certainly a lot of consolidation in that area, and we know from history that, pardon me, this looked to be like we were breaking the downward trend for the longest time. It was trend from June all the way down to December. It looked like it was being broken. Things got very enthusiastic and they turned around at 290. So if we can come up to 290 again, that would maybe be a second top. We could maybe look at this and ask questions about cup and handles. Maybe there would be a shakeout back down again, back test. I hate that word. This as support. Test the 618 there afterwards. Perhaps even the lower end of this channel, if the time-wise dictates that that's the case, at 250 then thereafter for the handle, and then potentially shoot on up thereafter, okay? That's the long-term perspective. That's what you would want on the bullish case scenario. Obviously, breaking towards the downside, again, it's the same targets as what we've had for quite a while, at 177 being, where you'd be looking towards overall, as Sophia herself, I'm speaking about, wanted to get in at yesterday. Is there anything to look at in between times? Of course there is. 220 is the crucial area in terms of support, as it was back here, and then here, in this area, it was very crucial. If you're a long-term subscriber, then you were aware of all that back then. 220 has then resumed that case for us. If time sees it coming down here over the period until the 11th of June, it'd be even more crucial at that point. Of course, in between times, 230 is as well quite important in terms of potential support. And if we look here at Fibonacci retracement, I think it's fair if I move this one. If I move this one here up to incorporate this current price action, so that we can then draw in and say, look, where would they be? So that's wick to wick, this one drawn in here. You know what? Just move it over so it's visible, and I'll just get this up here. Give me a second. Appreciate your patience. Okay, that'll just do. It's not necessarily exact, but it'll do for sure. And that'll do. So $210 is the 236 line. So coming down to 220, you'd want to see a turnaround before $210 so that you don't get a valid Fibonacci retracement. Just doing the same thing again, and thank you again for your patience. Moving that down body to body, just so you can get the broader picture on this one, and then moving that up so it's at the body. Then 236 is at 211. So the 236B on this Fibonacci, if you're into Fibonacci, being at 209 and 211, let's call it 210, shall we? So the crucial area then is going to be 220 and 210 towards the downside should 230 not hold. 230 being important for a variety of reasons because of this horizontal line, but if you want to have an interim one, then the 50% retrace on this big down area, at 225 is maybe where you might be looking to, where we saw the previous wick highs coming up here on the 30th of April, looking for that to maintain the structure of the overall upward movement. Looking at this as well, we have the potential for an ascending triangle here on the stochastics. Could we at some point get a breakout here which sees things go up and achieve this off the back of these things? Potentially, but we could also come towards the downside. Looking at this high versus our previous high here, it's not bearishly divergent, but looking at it versus the actual previous high, because this isn't the actual previous high here, it is bearishly divergent. You've got bearish divergence here, look here and here. So could we see this come back down again and challenge these areas and try? We certainly could. And how's the DMI doing? Well, the DM positive has moved up significantly, as you would expect. Looking at the previous high though, there's divergence here on the DMI. Not a lot of people do this, but it's totally doable. It's one of the main use cases of this thing. So you've got bearish divergence there. Whereas the ADX, which is your strength indicator of trend, it's down at 14. It's actually quite low, in the 24-hour time frame. Could be looking at this coming down to areas which incite volatility. Look at here on the 10th of May, for instance, 10th of May here, you're looking at lows down here with these wicks that came up to highs subsequently of a 25% move. Should the same thing happen in reverse and you're looking at a roughly 25% move drop off in prices, then of course you're looking down to these targets like we spoke about, for instance 185, which has been one that we've looked at quite a lot over the course. Okay, so we've come up to here and that's good. The next target towards the upside, should you want to have one towards the upside, is 250 naturally, but we don't have to get carried away. The 618 retrace there is up there for the golden pocket. I would certainly expect there to be profit taken should we move on beyond this area up to there, ahead of instead of getting carried away with ourselves and looking up towards the full measured move off the back of that. And could this thing be this channel be arranged slightly differently? Well, it could just be like an ascending broadening wedge on the biggest possible time frame, that sort of thing. And indeed, if we scroll right back in again and look at this price action and just take a new line just to show how this could work, you could be looking at this area overall forming a sort of rising wedge here, although there's patterns on top of patterns there. It's too much. We don't need that much. We don't need to go crazy with it. And yeah, that's great. That's great. We've had this volatility happening around this time period as well. We're looking out for volatility in amongst the time period when the sort of the 70 and the 280 were to be crossing, and they cross back here. Now, could this all come down here and actually retest these things as a result? Subscribers know why I talk about these two moving averages. Can't be bothered explaining it right now. Apologies. Well, yeah, we could, and that would see the prices coming all the way down to 185 if that were to be the case. So that's the sort of the negative. As ever, the trend's your friend until the end of the trend, but I'm pleased that everybody who subscribes to the channel and who happened to tune in yesterday, again, please do subscribe. I really do appreciate it. Yesterday's video got 300 odd views, which is for me quite unusual. They all knew to take profit in this area at 245. I'm not a financial advisor, none of that's financial advice, but anybody who's shorted that down there is sat potentially having taken 5% profit or so on the move today. 245 down to 235. You don't need to have any more than that to be a completely successful trader and professional and actually dedicate your life to it. So you don't need to hold on to things, but there is another 5% potentially for this to come in down here, just sitting in a higher low. But there you go. It's done now. Right, great. Thanks very much. I hope everybody's dead happy out there. Get some sunshine yourselves. I'm going to, in about 20 minutes when I finish making these videos. No, an hour and 20 minutes when I finish making and then editing, exporting, uploading, writing comments, sharing, whatever. But I hope to get some good sunshine today. Thanks so much for tuning in. I'll catch you in the next episode.